Jackson County is in a strong financial position despite dwindling federal payments meant to offset losses in timber revenues for counties. That, according to James Lanzarota, partner with the auditing firm Moss Adams LLP, in a recent presentation to county officials.
This is kind of the way that we complete the audit process, is to come before you and talk about the results. And so you've got an audit committee, and we've already met with the audit committee. We went through a pretty detailed review of the audit results, but it's important to come before all of you and do the same thing. And so that's what we're here to do. What we'd like to do is just kind of remind you a little bit of the nature of the services that you engaged us to perform. And then we did already do what we call the required communications under our audit standards with your audit committee. There's a couple things that I think you like to hear about, and so we'll just hit on a couple of those. There's responsibilities on our part in doing an audit, but there's some responsibilities obviously on the county in the accuracy of the financial statements. Talk about that. And obviously you want to know, what did we find? So after we did all that work, what were the findings? And I think last year might have been the first time we did this. The audit is really centered around the accuracy of that financial statement document that management puts together. And we really don't talk about what do the numbers mean. And I don't want to get into any great detail, but there are just a couple statistics in there that might be interesting to look at, so you kind of get a sense of perhaps the health of the county or a few trends in just a couple areas. We did have a couple best practice observations. We'll talk about that. And then there are a bunch of new accounting standards coming down the pike, and we generally like to just not to get into them, but keep it on your radar and hopefully ask for your support of staff to get the training they need so they can stay on top of those. Okay, so these are the different segmentations or pieces of the audit engagement, if you will. I think you have a pretty good understanding of the audit part. So that's where we really kick the tires on your financial statements. We come in, we look at source documents, we talk to your staff. We also talk to third parties like your bankers and the folks that hold your investments, confirm directly with them about the accuracy of the numbers that you've reflected in your financials. But there's also an element of that where we're required to look at the internal controls, or what are those checks and balances that management uses to produce accurate financial information. And we have an obligation to report to you if there are weaknesses in those controls or those checks and balances that management utilizes. And we'll talk about that today. Obviously, in today's environment, everything seems to be driven by technology, hardware and software. And that adds a real element of risk to your financial reporting. Do you have appropriate controls in the software that prevent access from folks that shouldn't be in particular parts of that? And what about security from the outside world? Could someone dial in and penetrate the county systems and cause harm or obtain information that they don't have the right to? So a big part of our audit is also kind of looking at that technology environment, looking for risks, and then helping us with our audit plan to address those risks. Now, you receive a fair amount of federal funds. You've done very well in the grant area, soliciting and receiving grants, and we'll talk about that coming up. But when you get federal dollars, that also puts some added responsibility on your auditor to do testing of your compliance. So how well are you meeting the compliance requirements that are associated with those grant programs? Not all of those are financial related. Those could be, are the right recipients getting the benefit of those grants, and are all of the expenditures eligible under the particular grant award and so forth. So we have had to do some testing of your grant programs, and we'll talk about that. So you're an Oregon Municipal Corporation. And as a result, the state of Oregon puts some added audit responsibilities on your auditor. And so there are 7 or 8 specific state laws that we have to look at your compliance. So a big one is budget law, for example. That whole process that you go through, pretty drawn out, pretty detailed on how you adopt your budget, the public notifications, the public hearing, and then how you manage that budget during the year. And so that's a big part. Public purchasing, insurance, the legal depositories of your cash and investments. Those are all elements. And then we have to report to you if we identify any instances of non-compliance, and we'll do that today. We have to communicate, so we communicate with management as well as your audit committee, and then here today with you as an elected board. So that's a big part of the audit. So our responsibilities, obviously we've got to issue an opinion at the end of all of this, which we'll get to in just a moment. But we do have standards that we have to apply to this. So there's both generally accepted auditing standards, and there's also some additional government auditing standards because of the federal grants that you get. So there's kind of a set of criteria that we follow in applying the work that we do and performing that audit. In your financials, you put together what's called a complete comprehensive annual financial report. And so there's added elements in there. There's some budgetary schedules or some other information in there. So we have an obligation to read everything that's within the covers there. And so we do that. And then obviously we've got to communicate the results. Those are our responsibilities. Of course, yours is to prepare accurate financial statements. So management has to have the ability to capture all the transactions and balances. They're responsible to have the appropriate internal controls that enable them to do that. Obviously, you're the ones that need to comply with the particular laws and regs, both federal and state. We do some testing, but ultimately you're responsible for that. If you're aware of fraud, it's important to tell us that so that we can plan our audit appropriately. So we ask a lot of questions and so forth in that realm. Obviously, you need to make information available to us in our requests, and your staff does a very good job of that. And then we ask for a representation letter from them before we can issue our opinion, where they basically confirm that they've provided the information we've requested and they've been accurate and open and honest about the responses to our questions. All right, so we did all that work. What did we find? So here's the fun part. On the financial statements, we came to what we call an unmodified opinion. So basically, in layman's terms, that's a clean opinion. So you can't get any better than that. Basically, that means that your crew did an excellent job of capturing your transactions during the year and the balances as of year end. And they appropriately put all of that together in that annual financial statement document with the appropriate footnote disclosures in the bells and whistles required by the professional accounting standards. So that's, I think you've got quite a history of getting clean opinions and something you should be very proud of. On the Oregon Minimum Standards report, so that's that work that we did where we test about 7 or 8 state laws that you're required to comply with, and we had no instances of non-compliance. And that's also remarkable. I think the most common type of non-compliance we find are over expenditures against your budget. So with all of our clients here in the state of Oregon, with all the funds that you manage and the legal level of control within each fund, there are a lot of opportunities to overspend. And the challenge isn't so much during the year, but when you get to the end of the year, there are additional expenses that get accrued. You haven't paid that bill yet, but you've received the bill. It needs to be reflected. Sometimes that can trip you up, kind of being able to know where you're at in that final month of the year. And so those are common elements that can trip you up to stay within your budget. But anyway, we had no instances of non-compliance on that. Public purchasing, the deposits that you use for your cash and investments, and so forth. So very, very good report for you.
Hi, I'm Amanda Moore. I'm a partner with Moss Adams. I actually work in the Medford office, and I've worked on the audit this was our fourth year on it. So in addition to the financial statement reports and the Oregon minimum standards, we also issue our single audit report. So this is our report that covers basically the federal awards. So as part of your audit, we did testing of your federal awards. And I believe in the current year, the federal portion was about 19.9 million. And so we have to get a certain amount of coverage when we're testing over the single audit. So that just covers the federal piece. You receive a number of other awards from the state or other sources, but the federal piece has a very specific requirement to it. So in the current year that we audited, there was about 19.9 because the county is a low-risk auditee, so over the years you haven't had findings, you issue reports on time. We have to get 25% coverage of those programs. In the current year, we audited 2 programs to exceed that coverage. I think we got about 34%. And as part of that audit, we also were able to issue no instances of noncompliance. So that was great over there. It's a tough area because there's a lot of requirements on the federal award, so it's really tough to get in instances of non-compliance, and you were able to do that, so that was great. And then in addition to that, we also issue our Yellow Book report. So kind of an unusual word there, Yellow Book, and actually it's our governmental auditing standards that we follow, and it actually comes in a yellow book, and so they call it the Yellow Book report. And as part of that, we look at your internal controls and compliance as well. And we also found the county was in compliance. So if you read through that report, which these ones are at the back of your financial statements, they're the reports at the very back, you'll see that we had no issues of noncompliance. And then as part of our audit, we do look at internal controls, and as part of that, we evaluate them for what needs to be communicated to basically those charged with governance, which is the Board of Commissioners. And as part of our review, we didn't find anything that was required to be reported. We didn't find anything that was a significant deficiency or a material weakness, so we didn't find any issues with internal controls that rose to that level. It doesn't mean that there wouldn't be any. We just, as part of our review, we did not find any, so that was great. We did identify 2 areas for either as a best practice or a recommendation for the future. And the first one relates to subrecipient monitoring and tracking, and this is with respect to your federal awards. So in the past years, there's already been this there's always been this best practice to document your subrecipients. So when you receive federal funding and you pass that through to a city or other entity, to track that and report it on your schedule of federal awards or within the notes. Right now it's just considered a best practice. Going forward under the new uniform guidance, it's actually going to be required. And so while this year it's not a finding, we just have it as a kind of a note for the future because that will be something that's required. So we have that listed as a best practice to consider for this year. The other one relates to assignments. This is within, if you look at your governmental fund balance, you'll typically see about 5 different categories. You'll see unassigned, assigned, restricted, so funds that have some sort of restriction on them, committed, or non-spendable. The accounting requirements require a formal policy to use the assignments category. If you're not going to use them, the policy is probably not necessary. However, the county does tend to use that category, so we just recommend to actually just document a formal policy. Again, no findings there, just a recommendation for the future to actually develop a documented policy in order to use that category within fund balance. After that, Jim is going to, so we're going to talk about some just trends in the county, looking at past years and looking at a couple of other variances.
So again, just to kind of recap from that point of view, so clean opinion on the financials, no instances of non-compliance either for state purposes or on your federal grants, and no instances of control weaknesses that are required to be reported to you. And the best we could do is come up with a few observations for best practice recommendations. So that's awesome result for you. So you should be very proud of your crew and the leadership you're providing that enables you to get to that point. So anyway, just don't want that to get lost in the shuffle here. It's excellent news. But sometimes we don't even talk about the numbers. Our audit really is not directed towards the health of the county. It's really directed towards whether your financial statements are an accurate portrayal of the financial results and the balances at a point in time. But I think it's good to look at this. This chart shows you some revenue trends. So we break it down in your major categories of revenues. And one of the things that I really like is the county's ability to attract those grants and contributions from others. So those are federal and state grants. Sometimes they're contributions from developers. They can come from a number of sources. Most of yours are federal and state awards. And look at that, nice trend line there. Charges for services is something you've probably had to be pretty aggressive about and find ways to collect revenues, but appropriately from folks that are receiving services. Property tax revenue's been really pretty flat. I mean, you're only $3 million more than you were 4 years ago. And so property taxes are just a portion of it's a significant portion, but it's not like you're out there really raising your revenues solely from the backs of your property owners. And then you've got some other miscellaneous revenue sources. So it's in some ways for your residents, they should be pretty proud that you're out there finding grants and amounts from outside of the community that's driving a nice for the revenue there instead of all of it being from property taxes. On the spending side, these are the major categories of the different types of services that you provide. And again, one thing I think the community would be and should be pretty proud of in some respects is the general government piece. Look at that. If anything, you're down from where you were. So obviously, your management crew here, Danny and his staff have had to deal with some declining revenues or financial challenges, and they've done that fairly well with the general government services. Those have not swelled. One thing that's taken a hit, obviously, the community justice and safety. So that's unfortunate. And then you can see in the other categories where you're spending your dollars. So you're actually spending less money than you were several years ago. These are expenses on a full accrual basis, so it's not exactly spending, but this is measuring when you incur a cost, not necessarily when you cut the check for it, but you spent $12 million less, or you incurred $12 million less in expenses in the year that ended June of 15 than you did the year before. If that helps.
And going back, it's been
Yeah.
a similar trend.
Well, you can see 4 years ago, your total cost of providing services here at the county was $159 million, and it's $134 million in this year that just ended. So you're down $24 million from 4 years ago in terms of the true cost of providing the services here to your community. Another way to look at it, just like your general government fund balances that Amanda talked about, if you look at your fund balance, if you will, or the equity on a county-wide basis, on the same way that a commercial enterprise would put its books together, that first bar is the total. If you took all your assets here at the county and you liquidated them at book value and you paid off all your debts, this is what would be left over. So in 2011, that was $481 million. It's $483 million at the end of June of 15. And what I like about this graph is that it shows stability. So, you can always probably have some lengthy discussions about how well you're meeting the need in the community or whatever, but at least you're doing it in a financially responsible manner and you're maintaining the net position here at the county. The other bars break it down into different components. So the grayish bar, the second one there, measures how much of your resources are invested in things like buildings and bridges and roads and infrastructure, equipment, and that sort of thing. And what I like about that is you actually have an improving trend line there. So what I worry about with a lot of our governmental clients is that when they get into financial stress, one of the things that they'll do is quit those investments in their capital assets. I mean, it's easy to not replace, a piece of equipment, or not replace a building, or not replace a bridge, or do major maintenance, but that cost is still there. The only thing you've done is pushed off when you have to cut the check. That eventually that check has to be cut. So you've been maintaining your capital assets here at the county very well, and that's what that graph demonstrates. The other two bars are your restricted and unrestricted resources. So Amanda mentioned the restricted ones. Those are the dollars that you had left at the end of the year where there's an outside commitment on where you spend it. So this could be federal grants that just hadn't been spent for their intended project, for example. And then the final one is unrestricted. So those are the resources that you have available pretty much at your discretion to apply. And those are stable. You probably don't want to be accumulating resources if you don't have a need for it, but you don't want to decline in it either. And so what I see in those is stable numbers. You have had a slight decline in your unrestricted from 100 million 4 years ago down to 71 million at the end of June of 15, but it's still fairly stable. And then you can ask yourself questions about those unrestricted. How much should I have? And so this graph just looks at your general fund, which is the one that you have the most discretion over. And in your general fund, here's the revenues, expenditures, and remaining fund balance for the last several years. And you can see that for the most part, you've had expenses about equal to revenues, or your revenues slightly ahead of expenses most of the years out of the last 5. And your fund balance has varied between 71 million, and it just ended at 57.3 million at the end of June of 15. So again, we're seeing some stability. It's a little bit down from where it was 4 years ago. And one way to measure, what's an appropriate amount, or what should I have, is there are some best practices out there. And for most governments, what credit rating agencies and those that look, if you were to issue a bond, they look at your general fund balance. And a best practice is a minimum of about 15% of expenditures. And you've varied between 100 down to 75, and now you're at 89% of expenditures as of June of 15. So that's a very, very healthy position to be in.
Jim, I just want to make one comment. This is just to clarify for the public. A lot of times people will say, well, you had $100 million in fund balance, and now you're down to 71 million, 59 million. What are you spending all this money on? I think it's important for the public to know that what we've done is we've taken that fund balance and invested it in those capital assets that you talked about, buildings, infrastructure that the county has needed. In fact, we've built over $175 million of capital infrastructure in the 10 years that I've been here without asking taxpayers to pass one new tax. At the same time, we're spending $24 million less a year, as you said, and we're maintaining our assets. So I want the public to know that spending down the fund balance doesn't mean that we're spending recklessly. What it means is we're making important investments, and in other jurisdictions, typically those important investments come on the back of taxpayers paying additional taxes for them.
Yeah, good points. Yeah, it's interesting that when you look at your graph for the capital assets, so that gray bar here that's showing a slightly improving trend, the other thing that we see is that generally this is a decline for governments that are in financial distress, and then when it comes time and you just have to, a bridge is unsafe, you've got to replace it, about your only option then is to go get debt, take on debt to pay for it. I think what you've seen in your case is where you've been able to just take some of your cash and do those investments. So you're hanging on to revenues to do it, and not taking on perhaps as much debt as some of your peers would do. So it's nice to have debt is appropriate. It's a tool if you use it wisely, but you don't want to have to use it every time that you go and replace a capital asset.
Do you intend on addressing our asset to debt ratio a little bit with the board?
Yeah, not today, but we could. I mean, you have very little debt. I don't have that statistic at top of mind, but compared to your peers, yeah, the county here has very little debt. Yeah. So that's something that you should be proud of as well. Debt is a good tool. You shouldn't be shy away from it. The point is that if you use it wisely, you've got to repay it. You have to have a resource to repay it. As long as you have that, debt is it can be a tool. I think that what tends to happen is a lot of governments use it as their only source to go out and, replace capital assets. And perhaps there should be a better program of hanging on to reserves so that you have some resources when you need it. And I think you do a good job of that. Another thing that we do for some of our counties is just look at the property tax rate per thousand. There's a few counties I think that you might benchmark off of, and for those, their average is $2.33 per thousand. You're at $2.19. So your property tax rate's actually a little bit less than some of your peers out there. So that's an interesting statistic. And yeah.
Are you including in that rate the debt service for the library bonds? Because our actual permanent rate levy is $2.01.
That's correct.
Yeah. Okay. Just so the board and the public
Yeah.
understand, a portion of that actually will be paid off in 4 years,
Yeah.
which means a reduction in property taxes. We've also reduced property taxes from paying off our juvenile bonds early and eliminating our urban renewal early. So we've, in addition to all of the things that Jim's mentioned in terms of our financial health, we've also been able to reduce taxes. The county applied taxes at the same time.
So really lots of good news today to bring to you. Again, I know that it's a challenge to meet all the need in the community. I can't really address that piece of it, but you can't really meet that if you don't have the financial strength to begin to address those needs. And so very good results for you in terms of at least the handling of the financial side of that equation. These are the new accounting standards that your staff had to implement this year. The big one was on pensions. So you have your own pension plans, and then you're a member of Oregon PERS. And so they had a big job on their shoulders to implement this new accounting standard, which we won't bore you with, but I do want to recognize that was a pretty big deal for your crew to implement, and they did a phenomenal job of that. So Shannon and her team, and so hopefully you can have an appropriate chance to recognize her and your staff's efforts to do that. And then here's a whole bunch of standards coming down the pike. Again, I don't want to go into too many of these. There's one on there that might be of interest to you, that last one on tax abatement disclosures. And so your financials and the financial statements of any government that has the right to a property tax or tax revenues, if you opt to forego those revenues, say a business wants to locate here and you have a program where you can defer their taxes, or they can get an abatement for some period of time. Maybe you're meeting an economic goal of the county. There's going to be a requirement to disclose the dollar value of that abatement in your footnotes. And so I'm just bringing it up because as you're making decisions and where you may have, the first thing will be just trying to figure out what programs do you have that will be scoped into that. And then when you're making decisions as a board, recognize that will be pretty transparent in your financial statements. There'll be a requirement to disclose that. And then also it's problematic for you because you're a county where you have the responsibility to do the assessment and collection for all the taxing districts in your boundaries. So there may be other governments here that will be reaching out to you for help so that they can meet their disclosure requirements. So your assessor may be pretty busy this coming year helping these other governments getting the information they need to meet this disclosure. And Danny?
I'm just going to point out a couple of examples for the board and public. So our enterprise zones within the county would be a tax abatement. There's a payment in lieu of tax negotiated agreement option that falls within the state government. But I was going to ask you, since our county is around 50% federally owned, does that include subsidies made by the federal government that are payment in lieu of taxes, since the federal government doesn't pay taxes, or does it only apply to people that would be required to pay tax?
Yeah, it's your tax that you're entitled to where you've agreed to walk away from some tax to benefit someone or to meet some goal that you have, some economic development goal. So yeah, the severance taxes from the feds and so forth would not be part of this. The other ones, again, are up there just to tell you that the Governmental Accounting Standards Board is active, And so that provides a challenge for your finance staff to stay on top of this. And so we're just asking for your support to help them stay on top of this stuff. They do a pretty good job of it, but it takes some budgetary resources for them to get the training that they need on this stuff. And then these are, actually one of these has been issued now, but these are all the standards that are currently in the deliberation stage. And so there's a lot going on there. Again, not my intent to go over these unless you have any particular questions about any of them, but a lot of stuff in the works. Really, that's our report, and I feel like we went pretty fast, but sure would entertain questions that you might have.
Look, I think I have one question, and that is the portion on the federal awards. On the federal awards, was there particular programs that you looked at specifically?
Yeah. Do you remember off? Go ahead.
Yeah, we looked at both of the ones related to secure rural schools. And the reason why we looked at those this year is every year we look at something that's called a type A, so there's a threshold, and if it's above that threshold, we have to look at it. And for type A, so anything that, I can't remember what your guys' was off the top of my head, but anything basically over, we'll say 500,000, I think yours was slightly more than that, you have to do a risk assessment over that. And if it hasn't been audited in the past 2 years, it's required to be audited in the current year. The past few years, definitely AIP, so your Airport Improvement Program, has been one of the larger ones that we've always tested. However, in the current year, because those two other programs related to the secure rural schools hadn't been tested in the past 2 years, those are the two that we tested. So, yeah.
I had more of just a comment, and you know, these are becoming routine, but there is nothing routine about how remarkable I think it is that the county is able to achieve so many successive unmodified opinions, for one, and at the same time have been able to operate much more efficiently. You know, we have no discernible loss of service in the county that I've experienced or heard. Continuing capital investment, and at the same time lowering taxes. I mean, I know I'm just kind of echoing what you're saying, but again, I think it's important to point out how remarkable this is. And I know this is a testament to you know, many different people working in cooperation. Our budget committee, I mentioned the Board of Commissioners in this as well, department heads, our finance staff, and I'm going to give special thanks and congratulations to our administrator, Danny Jordan. I think he does a great job. His leadership and acumen, I think, is truly you know, one of the reasons we are where we are, and I want to recognize that. So again, thank you, and great job to everybody.
I will echo those comments as well. It's good that we have a third-party audit. I think that's so positive for the people, for the money, for the operations in Jackson County, and that it is such a clean opinion, I think, and their recommendations to watch for what's coming down the pike, and we do support our staff in being prepared for those. And I echo the sentiment to the staff, the departments for finance and audit, and our administration. We obviously don't micromanage any of the numbers, and it's so good. I mean, if there was an issue, I'm sure we'd be right on top of it to know where we stand as a county and support our staff as they do fabulous job.
You know, one thing I didn't mention is that our audit contract is actually managed by Eric and his staff as your auditor, your internal auditor here at the county. And the other thing that I find really phenomenal about the way you're organized is your audit department, not only do they do performance types audits for you, but they also have their hand in some of the financial elements. So actually they do some of the compliance testing that we leverage off of in our audit, and they look at financial related controls and compliance issues, which is pretty unique. So you have a staff, I don't know what your staff is, Eric, three people, which is really good. Some of your peers have none or one, and it's very hard to be effective as an army of one. So Eric does a good job of managing your internal audit shop, and I like the mixture of how they do performance work as well as some financial related work or compliance and that actually reduces your external audit fee. We're able to leverage off of the work that they do. So you've got a pretty good functioning internal audit. I often hold it out as the standard when other counties or governments ask for our opinion about audit shops. I say, go talk to Eric down there at Jackson County, because I think you've got a pretty good organization and a good performance plan for them during the year. So.
And I was probably remiss in not mentioning Eric and his staff specifically as well, so thank you for being part of that also. And thank you very
Okay.
much. Appreciate your report.
Okay.